Hello, everyone. It's Alex Katutis here with Revere Asset Management. Today is September 2nd, and it is 3:30 Mountain Standard, about 6:30 Eastern. Today, I will go over our bonus stock that we have previously gone over, and as well as just an update on what I'm doing to handle those positions. But before we move on and go on to those stocks, here's our contact information. You could reach any one of us at dan@revereasset.com, Tim, Hunter, myself, or Don, or Merrill, our office manager, and we'll answer any of your questions or any of your needs, or you can call us at 855 Real Wealth or 855 732 5932. And for today's daily market insight video, Hunter went over today's action and what we did in Revere in our Grotection portfolio, and you guys can check that out. Make sure you don't miss that. It's very insightful and will definitely help out on what's going on, the current market conditions. Okay, let's move on. So let's go over a line first. This was the first bonus stock that I did a few weeks back, and currently right now we're up 7%, so not bad. Like I said, that earnings gap really helped out, showed a lot of power, and it never really gave me a reason to sell. It held the 21-day exponential moving average, which is this green line, and showing great power. It closed its highest closing price ever, and it hit all-time highs today. And you could see here on the bottom right, definitely some accumulation going on with those blue bars, which is the buy side of the volume. And the red obviously would be the sell side. So we do see a lot more, and the RS line is hitting new highs here at 90. It's got a 92 RS, so things are looking good. I'm sure Hunter talked about this in his video, and he probably went over. We are a little bit lofty here and extended, so maybe some things that consolidate or pull back to some key moving average. I wouldn't be surprised, but for right now, I'll take that. That's a pretty good gain. The next one, this came up. I mean, this, you can't really ask for more. So this was the last daily market insight video, and I was saying try to get in at right here at 349.50, and it gave you guys that opportunity. It actually, a couple of days, it held that level very nicely, and this pink line, the 8 EMA, came up right to it. And guess what? Now we're up 7% in just over a week. That's awesome. I mean, you can't, I'm riding. I haven't touched the position, and I'm expecting it to maybe backfill a little bit. When I say that, it means it can come down a little bit, pull back to these averages. That's okay. I'm willing to, ride that through, and I have my stops, and maybe it'll give us a 10 and 20% gain, and we could start thinking about taking some profits or trimming a little bit, which is fine. The next one I went over in our podcast last week, and it was net, and it's not a typical position strategy, just buying stock straight up. What I thought you guys should look at are the net January 2023 140 strike calls. So you have over 500 days till those call options expire. So for anybody that's new to this, that sounds probably like a different language, which is fine. I'll go over it. Basically, what you're buying is a contract. It's not the it's the obligation, not the, it's not, excuse me. I got mixed up there on my wording for what a call option is. It's not the obligation. You're not obligated to buy the stock at that price. You have the option to sell it before, and you don't have to exercise it. So if you buy like these January 140 calls, okay? And I'll show you actually on the options table what they look like. You're basically saying that within 500 days, it's going to go to a certain price, which I think it's going to be above 140, because they're selling for about $21 a contract. And that means that one contract costs actually $2,100. Okay, so just add a zero at the end. And basically that would mean to break even by January 2023, so 500 days from now, I'm basically saying that net is going to be above $160 a share or higher. I would take that bet. I think that's a good risk reward for that much time and a leading winning stock. I think this is setting up. And since last week, that leap option is already up 11%. That's pretty good. I mean, it's not going to always, you're going to have down weeks and stuff, but the key is not getting shaken out. And I use a wider stop. So use like a minus 20% stop loss from your cost. And how you can do that is using less weight to your portfolio. So only using, let's say, 4 to 6% of your portfolio size. So if you have $100,000, let's say, okay, try not to use over like $5,000 to $6,000 of your money. So then you can take that 20% loss without sweating too much, and it won't damage your portfolio. You don't want to go in there with 20% position size, because if that thing goes down, you're going to feel it, and it's going to take some time to recover. Let's go to Think or Swim. This is the software I like to use for my charting. And before we move on to those net leaps, something I want to show you guys. This is the G5 index that Don had created with IWO, the IBD 50 index. You can see on the top left. So IWO, FFTY, QQQJ, ARC, and PDP. And I just add those all together, and it creates a chart of all those ETFs together to create the G5 index. And we're setting up, this looks very good. And this orange line here is a 50-day, it's hooking up. So I really like this. We're going to start tracking this index that I think is a really good way to see the health of the stocks that we trade, and they're working out. So let me show you, let's move back to net. I want to show you the options grid real quick. This could be complicated, and please call me if you guys don't understand this and it seems confusing. I would love to talk to you about this stuff. It's what I do. Okay, so these are the contracts right here. So these are the call sides. Okay, this is the put side. The put sides, you think it's going to go down if you buy them, and if you sell them, you think it's going to go up. Calls, I think the stock's going to go up. So I bought these 140 out of the money because the stock's at 128. So I think it's going to go to 140 or higher by January 2023. So we have over 500 days. This number right here, 5,400, that's the open interest. That's our open contracts that someone owns right now or selling. I think they're probably on the buy side, because if you're going to hedge your position and sell calls, you're probably going to do a closer dated call. So these leaps are typically not leaps that funds sell. They're usually on the buy side. Okay. So that was why I targeted those, because they had the highest open interest out of any of these dates. Okay. Let's look at something else. These are called Greeks. Okay. And you're like, what? Greeks? So delta, gamma, theta, and vega. All right. I typically pay attention to two of them, delta and theta. Delta on these is 55 cents. What does that mean? So that means that for every dollar the stock goes up, your option will go up 55 cents, and vice versa. For every dollar your stock goes down, your option will go down 55 cents. Now, that delta increases as the stock goes up closer to your strike, which is 140. Now, what's theta? That's called time decay. So if your stock just does nothing, let's say tomorrow, net doesn't move up, it stays at where it is, 128.61. Your option will still decrease by 3 cents, which isn't much. And time value, that time decay, okay, it relatively is low on very far out dated calls like these. You don't start to see theta decay until you hit 30 days and under on options contracts. Let me show you that. Let's go to September of this month, and let's go to the 140s. They're decaying at 9 cents or 10 cents almost. So every day those are going down 10 cents. And guess what? How much are they worth? $1.90. So you're losing 5 to 10% on your options contract without it even going down. And this is where time is so important with options. You can't just buy them and sit and not watch. They require, it's an art form. And it takes years to develop that experience on where to find an opportunity like this. I do think that this is could be a winner. Things don't always work out, and that's why we have stop losses. But I wanted to go over a couple basic principles of what I look for in a leap, which is a long-term options strategy. If you have any questions, please email me at alex@revereasset.com or hit me up on Twitter at _optionator on Twitter. You can find me there, and or hit up Tim. He's got a pretty big following on Twitter, or Don does too. And call any of us. We're all pretty experienced. Hunter's pretty experienced with options as well, and so is Tim. And but for these, if you have a question, I would love to talk to any of you guys about this. And that's it for me today, and I hope everyone has a good one. Bye.